Is this market immune to world angst? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Thursday, the 9th of August. Should the equity markets close higher today, and I emphasize should, that would mark the fifth day in a row that the markets have closed on an up note. The last time that happened was 5 months ago in early March of this year. It's a pretty rare occurrence when you see a market do this. I'm sure a lot of the bears are perplexed as to why the market is not tanking given all the problems of a slowing world economy. The latest news was out of China this morning was that its factory output had slowed to its lowest levels in over 3 years. That was the July report. And that was below what most analysts were looking for. Well, I guess it was such bad news the markets went up. The markets reflect life, and like life, there's reality and there's fantasy. Right now, the markets choose optimistic, fantasy-wise, whoever knows, hoping for that ever-elusive stimulus program that may never occur, or it may occur sooner than we expect. One never knows for sure, and this is the uncertainty that is driving the market today. So listen, have a great trading day, but let's go first to the charts and look to see what we're doing in the marketplace. So here we have my homepage, Adam Hewison. Welcome, Adam Hewison. Just like a member, I have the same page as you. Maybe some different stocks in there, but it's a great way to start your day looking at Market Club. And let's go to our portfolio. I've already set my portfolio up. It's for today, the 9th. I didn't do that yet. So I'll show you how to change the dates and everything else on this. It's really simple. So you just click here and just click like there, the date. Put 9 in, and you're done. Pretty simple. And so there we have, it's updated right here. So very simple to do, and it's easy to maintain many different portfolios, but I have a lot in mind, but you may want to have only a few that you track. So let's start off with the S&P 500. As we can see, it's a plus 60. If you've been following these reports for some time, we've been plus 60, plus 70, minus 60, minus 70. It's really jumped around but gone nowhere. You can see we traded as high as 1405 today, almost 1406, and now we're back down to 1400. So really not a lot going on. The bulls don't have enough to push it up, and the bears certainly don't have enough, at least at this time at 12:30, don't have enough power to push it down. That may change later today. So let's go to that chart, and let's just go to look at just the last 3 months, because we know what's happened in the last couple of years. But this is what you want to watch here, because this is really getting to be a little bit concerning over 1400. As you can see, our trade triangles are still negative, and this is what the point we've never gotten really fully on board with a very bullish forecast for this market, because our trade triangles, our long-term trade triangle, has always remained red, indicating that there was danger following this move up. Intermediate term trend, yes, we're positive from 1334, and that's a good thing. If you're trading the intermediate term trend, you should basically be out of this market right now, because there's really no reason to be in it. It's chop, 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 and you can see all these moves down, moves up. Really confusing. So here we are. Let's see how we close today. I would say if we close below yesterday's low, and yesterday's low we saw at 13.96. If we close below that level, I think this market's going to have a pullback at least to the midpoint at 1370, maybe 1360. So let's move on to our next market. We've moved them around a little bit to make it more interesting. Of course, this is the euro. And if you remember on the euro, we basically indicated that the 124 level, which is right here, was really a difficult point, and see how it rolled over to the downside. We expected that to happen. Of course, it has happened, because our monthly trade triangle is still negative, and that's the bigger, more powerful trend in this market and maybe on the S&P 500. So with a score of 55, we're still sort of locked in a trading range. Haven't got quite out of that, but I would say probably if we go below these lows here, we're going to see this market really start to accelerate on the downside. We're still looking for the 120 level and the 117 level on this market. So let's see how it performs. But generally speaking, the trend is your friend. The trend is down, and certainly today's action is negative. And The euro is lower on the week, which is the important thing to look at. How you see these markets during the week is very important. It's Thursday today, Friday's tomorrow. If we see the equity markets potentially close lower for the week, that's a clue. And also that this market closing lower for the week is also a clue that the move up from these lows here is probably over with. I'm going to take another big move on the downside. So let's clear the screen, go to our next market. And as I mix these up, I'm not sure which it is. I think it's an equity market. It's the Dow. Pretty much the same thing on the Dow. You can see we sort of dallied around here for the last 3 or 4 days. And this is this uncertainty that's in the market. Really, traders don't want to chase this market. They don't want to get super bullish over 13,000. And yet, if we go below 13,100, I think this market's going to have a problem. And if you can see where we closed last Friday, which is right here, we closed at 13,096. If we close lower for the week, that's going to be a real challenge. So 1396 is one level to look at. The other level is this PSAR, and that's going to move up again tomorrow. That is currently trading at 12,993. Now that moved up, let's see, 60 points. So that could be possibly at the 13,050 level, somewhere like up here tomorrow. So certainly where it's beginning to get a little bit hairy. And the other thing I caution you with, and this is the caution we talked about, and is this, we're making new highs here, but the divergences are really kind of flat and going lower. So I think that's a definite concern that I would have in this market right now. So let's clear the screen, go to our next market. And that's spot gold. Spot gold is just gone nowhere. I mean, the reality is if you're a long-term bull on this market, you have to have a lot of patience. Here's the reality. For the last, let's scope this out just a little bit further, you'll see really since the beginning of May, and you can just draw a box around this market right now. It's pretty simple. Let's say starting in the middle here, just it's really been boxed into this level, and it's really gone nowhere. You can draw a line in the middle. You can see every time it gets down to this, below this line, it's a buy. Every time above this line, it's a sell. So technically, we'd have to see, you'd want to be probably a seller somewhere up here. But the reality is, a long-term trend line, long-term trade triangle remains negative. Intermediate and short-term, positive. So that's why you have this dichotomy of really no trend and just sort of going sideways like this. So I think the best thing to do, there's no reason to get excited about this market, in my opinion, at the moment. I would rather let it wait and develop. I'd rather be a buyer probably over this level here. And you say, well, Adam, why would you want to buy it when it's moved so far? Well, at least at that point in time, you have the upward momentum. And right now, you just don't have anything. You just have no momentum whatsoever on one side of the fence or the other side of the fence. So I think caution is warranted right here. If you wanted to take, yes, if you want to be a buyer, yeah, buy it and maybe put it away and maybe put some long-term stops under this level here around 1540. But that would be just a fundamental view of things. And I will just clear the screen and we'll go to our next market. So let's do that. And we're looking at the NASDAQ. Again, we've had these sort of 3 tight days here. Here's where we closed last Friday, 2,967. We're just a little over 3,011 right now, so we're not so high. We could possibly come down here, but certainly today, and I'll scope this in a little closer so you can get a chance to see it. I would say today, this 3,000 level is going to be very, very key. If we close below 3,000 today, it's possible. I'm not saying it's going to happen, but if it is possible, if we close below 3,000 today, I think we'll see a lot more selling pressure come in, because what it's going to say is that this level here, the 3,028 level, that was 2 days ago, 3 days ago, 3,018, and today at 3,022. It's just the selling up here. You can see the selling pressure coming into this market. So someone's selling. I don't know who, but someone is selling this market. So I would not be surprised to see this market sort of roll over just as it's rolled over before and see this market come down. But again, Key level today, in my mind, is 3,000. So let's go to our next market. And this is crude oil. Crude oil, again, we talked about crude oil, is pretty much the same pattern there. If we see it close, I would say the level there, a lot of traders will be looking at the 92.80 level. If it closes below yesterday's low, that'll be very negative. And also, I think if it closes below the 93.41 level, we're very close to that now. That can cause this is a doji line. You see how this line here, let me just illustrate that. This line here, right, this one right here, that's a Japanese doji line, and that is a total equilibrium between the buyers and the sellers. So the buyers couldn't push it any higher, and the sellers couldn't push it lower. So it's sort of like a stalemate, but it often indicates a turn in the market. And here was a little one, not quite the same, but very similar. But you often have these occur at tops and bottoms of markets. So let's see how that plays out today. Still early, as I say, it's about 12:30 Eastern Standard Time. And we could see this market go down, particularly if we close below the level I just mentioned there. I think it was 93.60 or somewhere like, or 93.40. So let's see how that plays out and go on to our next market. And that silver again, like gold, is just like watching paint dry. It really hasn't gone anywhere, and you can see, just if we just put a line chart in here, you can see the points where it's just sort of stalled out. Really need to get it over this level here, which is right around the 29.25 level, to get it really going on the upside. I mean, certainly a move over this high here, which is the 28.24 level. We actually flirted with those levels early today, did not go up, and this is definitely a key level. We're calling 28.50 as a major level as resistance. But again, you've got this sort of momentum turning back down, no enthusiasm because you're at the top end of the Donchian trade channel. I think we could see this market pull back and see maybe some profit taking there. Copper, and I'll put the chart on. We've already got a negative engulfing line here, something to pay attention to if we close lower today. We're minus 65. We've got the weekly and the monthly negative. That is not a good sign for this market. I think we'll see this market move down and potentially test the 335 level and even the 330 level again. So not a good sign for copper. Again, if you've been following our comments, we've had the sort of pattern where you have a highs here, high here, high here. I think this is going to be high. So these are the sort of like the jumping points. And this, I think they're about 16 or 17 days between these jumps. So pay close attention to that. But generally speaking, this is not a good thing. It sort of reflects the slowing economy, world economy that we're seeing here, and I think that's the important thing. So let me clear the screen off again and go to our next market. This is the CRB Reuters Jeffries Index. It just peaked over the 305.58. That's because corn hit an all-time high of $8.24 a bushel, which means it's going to be more expensive for food in the future. Also, that dragged up wheat and corn. And of course, you saw the crude oil earlier today. That was up also. I think for the most part, with our monthly trade triangle in a negative mode from 305.38, it's been that way for quite some time. I'm going to just wait until this turns green. If it turns green, great. If it doesn't turn green, I think we'll see another pullback. But let's play that for what it's worth. So anyway, what you may want to do in the meantime is to give us a call if you want to have one-on-one personal Market Club coaching. Can't speak this today, but it's a free consultation. It's a free call, 877-219-1482. Give one of our knowledgeable consultants a call right now, and they'll tell you the value of Market Club coaching, and you can determine for yourself, is it right for you? I can tell you this just from personal experience. Not knowing how to trade the markets and trying to go it alone can be very, very, very expensive. Far more expensive and frustrating than just actually having someone show you the ropes. It's like everything else. There's always secrets and there's always special things you can do to improve yourself in these markets. So, hey, I'm Adam Hewison. Thanks so much for stopping by. Every success in the market today. I'll see you tomorrow, same time, same place. Have a great trading day.